Good day everyone, and welcome to our second part of the Whiteboard Tutorial series, this time on rental yield. A lot of people have been sending questions in since the last Whiteboard Tutorial series asking about rental yield. What is rental yield? How do you calculate rental yield? So I thought, let's do an episode on rental yield. So essentially, rental yield is the rent as a percentage of the property value. So we'll write it in now. Rental yield equals rent as a percentage of the property value. So what we're looking at here is how much of the rent, what percentage of the property value can be represented through the rent, and we use this to calculate and look at our cash flow and our return on investment and things like that. So it's one of the more important calculations when we're looking at investment properties. Now, how do we calculate it? It's quite a simple calculation, simple formula. Yield can be calculated by rent per week times 52, and that will give you the annual rent divided by the property value, and then we times that by 100 and you will get a percentage, and that is your rental yield. So annual rent divided by the property value times 100. Now let's look at an example here. So let's draw a nice house, blue house, let's go 2 windows, put a door, and let's say we purchased this house for $500,000. So the purchase price, $500,000, and its value today is at $500,000. We get a tenant and we get them to pay rent at $450 a week. Now what we do is we take our $450 and then we times that by 52, and that will give us our annual rent, which is $23,400. So you make $23,400 in rent, and then we divide our annual rent by the purchase price, which is $500,000, and then we'll times it by 100 to get a percentage, and that will give us a rental yield percentage of 4.68%. Cool. Now, what happens if our property value changes, right? So we've got $500,000, we've got $450, that's giving us a rental yield of 4.68%. But what happens when it changes? So rental yield is the rent as a percentage of the property value, not just the property price. So let's say a couple of years later, your property value goes up to about $600,000. So you use the great buyer's agent at First Brick Buyers Agency. We helped you get a great home. It's gone from $500,000 to $600,000 quite quickly. You're a really nice landlord. You haven't changed your rent. We'll keep our rent at $450 a week, so it's still $23,400 per year. We divide the rent, the $23,400, by our new property value of $600,000. We times that by 100 again to get our percentage. We get a new rental yield, and that rental yield is 3.9%. So as you can see here, the rent hasn't changed, but the purchase price or the property value has changed, and this has given us 2 different rental yields. So 4.68% and 3.9%. Keep note that this is just a gross rental yield and gross rental yield calculation. If you want to do a net rental yield, what you would need to do is you remove all your expenses, or you calculate all your expenses, and then you add them together, and then you remove it from your annual rent. So you move it from your $23,400 in this case here, and then you'll proceed with the new number as per normal, and you'll get a new rental, and you get a new yield percentage net, which will be the net rental yield, which can be a bit more accurate for cash flow and return on investment. If you have any ideas of what you'd like for our next whiteboard tutorial, any questions, please put it in the comments below and let us know. Otherwise, thanks for listening, and we hope you enjoyed it.